Welcome to the sixth installment of HipMojo. I'm your host, Ashkan Karbas-Rushan.
And I'm CT Moore.
Welcome back, CT.
Thanks for having me. Lots to talk about today.
Lots to talk about. Soap operas going on at AOL and Yahoo. Of course, we're going to talk about whether or not the laws of diminishing return apply to advertising when it comes to scale and reach. Then later on in Lightning Round, we're going to cover a lot of things, such as CBS. We're going to touch base also on AOL, as well as Delicious. Delicious is coming back thanks to the guys who started YouTube. Let's get right to it.
Okay, so a lot of rumors going around, a lot of action around Yahoo's name right now. They fired Carol Bartz. Apparently they're not looking for a replacement. There's rumors of mergers. What do you make out of this? What do you think? What options does a company like Yahoo have left at this point?
Well, Yahoo has a lot of options. I think they are the premier digital media company out there. I think most users who visit sites don't really care about what bloggers have to say, and most advertisers also don't really care about what the bloggers think Yahoo should do. The reality is that Yahoo remains the largest pure-play digital media company, and I think they have a lot of momentum in the last year with what Ross Levinson has started to do, basically moving them away from being a tech company and more of a publisher. So I think if they continue that path, they might even do better with Carol Bartz gone, because Carol Bartz was like an operations person who came in to sort of, clean up the excessive layers of management and whatnot. She wasn't a product person. She wasn't a salesperson necessarily. I think she had to go. The way she was fired might raise some questions. Getting fired by the chairman over the phone is definitely not cool. But she had to go, and I think it was just a matter of time.
Fair enough.
I want to point out, though, that I think Yahoo has a lot of options. So Yahoo could basically stay independent. I don't necessarily think this talk about merging with AOL really holds any water. I mean, that's like the expression of tying two bricks together. What do you think is going to happen? It ain't going to float. Realistically, Yahoo could sell right now to a big media company such as Viacom or CBS or News Corp or Disney or Comcast. I don't necessarily see that happening. They could also sell to a tech company. Microsoft could come back. We all remember Microsoft offered $45 billion for Yahoo a few years ago. I'm sure, I used to own the stock at the time, no longer now. I'm sure they wish they could go back and basically sell to Microsoft. I don't necessarily see that happening. I think if they were to stay independent and unload all of the Asian assets, which really they have no say in terms of day-to-day, they would basically wind up with $10 billion worth of cash on their balance sheet, because the Asian assets basically account for 100% of the company's market cap right now.
Don't you think it might be worth it to hold on to assets in a growing market?
Yeah, but only if you actually have a say on it. We remember that Jack Ma basically spun off Alipay from Alibaba and sold it to himself, and essentially allegedly screwed Yahoo out of that shareholding position that they had. So forget not having any operational say on the matter, if you're not even aware that your holding has been evaporated, liquidated, it just goes to show that it's become a distraction. I think Yahoo's Asian assets maybe had a lot of strategic value early on, because the market assumed that they would be able to get some synergies out of it. It's not really the case. They're sort of run independently. And two, I think it's become a distraction. Yahoo has revenues last year of $7 billion, and they have EBITDA of $1.2 billion. Traditional media companies like CBS and Viacom trade for about 15 times EBITDA. So if you take the multiple of 15 times EBITDA and multiply it by Yahoo's $1.2 billion income, that basically means that Yahoo should have a $15 to $20 billion market cap. Yahoo right now trades for $15 to $20 billion, but that is really just reflecting the value of its Asian assets. So if Yahoo right now has only $2 billion of cash, but they sell the $10 billion to $15 billion worth of Asian securities that they have, all of a sudden their enterprise value, which is market cap plus cash, jumps up, which is market value less cash, it just jumps up. Their market cap would basically double overnight through just sheer financial engineering. So I think they will have to unload the Asian assets if they actually want to even buy anything. It was reported that they wanted to buy Hulu. They're still in the running, although it looks like Amazon and Google are the leaders there. And I think one reason why Amazon is the leader is because of the connection that Jeff Bezos, CEO of Amazon, has with Jason Kilar. But the reason why Google might end up winning the Derby is because they have more cash than anyone else. They can offer a lot more, not just in terms of at the sale price, but they can offer a lot more over time in terms of licensing fees, which is, I think, what Hulu's owners, Disney, Disney, Fox, and Comcast, NBC Universal care more about. If Hulu sells for $2 billion, $3 billion, whatever, that cash right now doesn't really move the needle for traditional media companies that own the Hulu stock. But if each year Google commits to paying those traditional media companies, say $500 million as an annuity, that will have a lot of value over time. So my guess is that Yahoo will find itself on the outside looking in, will not be able to buy Hulu. That will upset them enough to realize that they just need to raise cash, and the best easy way for them to do that is by unloading the Asian assets.
If they're going to focus on publishing and they want to make cash, do you think it would make sense for them to unload their web applications? Yahoo Search is already powered by Bing. They have Yahoo Mail, which really isn't driving their business in any meaningful way anymore. And then they have other services like Flickr, which they own. While it is content, it's user-generated, and it's not that premium style of content that they seem to be pushing, or you seem to suggest they push into.
I do think that they need to move away from being a tech company because they're going to not be able to compete with Google. In terms of selling off some of those assets, it's a great segue. We'll revisit this during the lightning round when we talk about the YouTube guys bringing back Delicious, and we'll talk a bit about what Yahoo could do with regards to Flickr. We'll be right back.